What's up, traders? Welcome back to another weekly outlook. This week is going to be jam-packed with some news, guys, so let's look right into it. I know we have NFP this weekend. It is the first week of the new month of June, so every first Friday of the month is NFP, usually, so majority of the time. Okay, so expect NFP this Friday, as you guys see here, which is June 5th. All right. Unemployment rate for the Canadian, and we also have the unemployment rate for the dollar as well. It does look like we have a lot of news as well throughout this week for some of the pairs and the majors. Yen, we have the Bank of Japan speaking on Wednesday, and then also we have for the pound, we have the governor speaking as well at 10 a.m. It looks like we have manufacturing PMI tomorrow morning. Those are little small red forward news. The main things that you guys want to pay attention to is the speaks, right, on the specific time that these upper people are speaking, and as of course on Friday, which is the unemployment rate that's going to come out. All right, so keep this in mind, keep this news in mind, guys, so we don't get caught off guard while we're trading this week. That is the main important thing. You do not want to be trading impulsively while these events are coming out. You don't want to get slipped out of trades. Okay, so just make sure you keep an eye out on those times and what news is coming out for the type of asset that you're trading. All right, now let's get into the charts. We're going to start with NQ here. Going on the higher time frame, we see that this market is inside of another bullish leg from this low here all the way to this high. The last candle, well, previous day candle before that Friday candle, tapped into this daily gap right here, and look at this closure. That is showing us that the market is still completely in bullish order flow, and we don't have any reason to stop. Okay, our latest leg is coming from this low right here to this high. So from this low to this high, we have our leg. Boop. And here's our 50% right here, which I do think the market can come into this 50% to rebalance price, take out these lows, right? It makes sense. We have liquidity underneath us, and then we're going to get into this liquidity a little bit more, but we have two valid liquidity points underneath us being session lows, 4-hour intermediate lows, and we have a purpose to rebalance price. It makes sense for the market to come lower, give us that manipulation here, and before we can just go higher on a smooth trail. Now, we know that the market doesn't always give us this smooth trail, but this is just the optimal scenario. Okay, so let me go to the 4-hour, or is it a 1 hour? I think it's just mainly this 1 hour right here. This 1 hour BISI right here. So A plus trade would be market comes lower, manipulates both of these lows. We trade into this 1 hour. We get a manipulation with an SMT inversion here. We take this higher. Okay. That would be a high probability area, but the market is going to open in about 4 hours for me, maybe 5 hours here. So it really depends on how the market opens. If we just gap lower into here, that's even better. At least we'll be starting inside of this range, so the market can create some liquidity points inside of this area in here for us to trade from Monday morning. We could gap higher. If we gap higher, that's going to be less probability for us, meaning the market's going to have to create new, fresh liquidity instead of reusing the liquidity we already formed. These liquidity points are much more higher probability because they are dated liquidity points from last week, so they have more structure behind them versus the market creating new points of liquidity. Okay, just always remember that. Now, going to the lower time frames, it does give us more reasoning to go lower, that we generated relative equal lows, right? We have this low, and then we have London lows right here. So we have this stack of lows down here, which gives us more reasoning. And then of course we have Asia lows, and then we have this also as a 4-hour intermediate low. So that's essentially my main plan, just based off this price action that we have right now. Like I said, that is subject to change depending on how the market opens. Currently, this is our high. Okay, that's our all-time high that we printed there on Friday. Pretty self-explanatory, guys. Essentially, we have, this is our leg, current bullish order flow leg on the intraday time frame, and this is our framework, right? Right here, 50% so far at the moment is going to be your highest probability area for taking more longs. I wouldn't recommend taking longs right here until we manipulate at least some type in some type of form, or it depends on how the market opens. But essentially, buy low, sell high. I don't know if the market will reach this low down here. If we do see the market give us some bearish momentum and we're coming lower into here, most likely I will anticipate us to manipulate here. We might get a small bounce just to manipulate down here, and then potentially we could trade away to reverse, or we could go lower, but it really depends on this momentum, and also Trump as well. So don't forget that. A lot of economical news that is affecting the Nasdaq right now. Okay, so let's move into the pairs. Went to the Forex pairs here. Let's go to DXY. Let's talk about it. I see that DXY gave us one more manipulation. Just to kind of give you guys an overview of what we've been talking about on DXY. Large accumulation. Here's our manipulation. This is our drive. That's where we have this low to this high. That's where you see these fibs at. And here is our 50% of that area. We see that the market has came into that already, right? We have traded into it here, gave an accumulation, came lower, traded into it again, manipulated, and then we gave this push to the upside into that imbalance that we needed to fill. Now we gave a distribution. All right. And this distribution is pretty solid, as we are having multiple manipulations and we're seeing displacement as well. Yep, we're seeing correct displacement here with this manipulation towards the downside. So with that being said, I do believe this can come down a little bit more into this 50%. This is where I would honestly watch DXY, is within this 50%, because if we do not get reactions from this 50%, that's slowing the market down, and let's say we just push through like this, we're seeing bearish momentum, most likely we will create a new drive to the downside before we could potentially start another larger schematic, if that's the case. But at the moment right now, this is the framework that we're playing in, from this low here to this high. So essentially the market has accumulated, and now we're trying to distribute. We need to see what happens here. This is going to be that deciding factor, how momentum comes into here. If we slow down, we start accumulating, potentially we could continue going higher. If it does not slow down, then potentially we can manipulate this low. Okay. But one thing I do want to say, that this is a nice distribution. So it is not something to play with. I can't really give you guys a, well, actually I can. Hold on. Let's go to the 1 hour time frame here. So here's our leg, right? That is our displacement leg here. I'm gonna put, boom, right? Put that as a point of interest. And here's our manipulation right here. Boom. London session manipulates into what? What do we have here? We do have a 4 hour gap. What else do we have? News. Okay. 9:30, open right here. London session trades into that. We give another move here at 9:30. Yep, or 10:30, news. Okay, so following the current order flow, right? Let's go down to a lower time frame and let's just look at what's going on in our distribution. and I'm going to delete this. Here's our last manipulation right here. Boom. So on the smallest form, on the smallest time frame here, here's what we need to watch, okay? Watch the market inside of this area. If we distribute into here, then we are continuing this bearish order flow from that distribution. Now, the market drives. Just drive through this. That is a different story. Depending on the momentum of this move, you can take longs. Okay, if the market does drive through this, you can take longs to target this high. This is just a smaller time frame bias. Overall, I do still believe in the larger distribution to take us at least into this 50%. That would at least make sense for us, but we can't predict the markets. Okay. Let's go to EU. Now, with that being said on EU, what did we talk about last week? Okay. That being said on EU, we know that DXY and EU are basically flipped. We have our larger distribution playing on. We have our latest leg from this high to this low. We have the market coming to the 50%, right? Coming to the 50%, we see a distribution right here. Distribution, market goes lower, reaccumulates, at least it tries to, redistributes. Now we have this main leg to the downside. So where is our current leg? What are we respecting? Where are we at? Well, we are from this high into this low. That is our drive towards the downside. And what do we see? Okay. And what do we see? The market is accumulating here, and we're coming back into this push, right? The 50% here, and then this being that area that I talked about as a potential point of interest to look for shorts on the lower time frame. Okay. Now, zooming into what we talked about last week, we did talk about the market trading into this smaller point of interest, which we did, and we did get a reaction off of it. So if you're able to get some lower time frame entries in there, congratulations to you. But I see here that mainly we filled the rest of this gap and we've completed this accumulation. So this accumulation has been completed, and now the market has been going higher, looking for that next supply point. So coming down here, we essentially have the same price action as DXY. We have this reaccumulation right here. We see that London session drives towards the downside, takes out Asia lows. We trade, I'm pretty sure, into a 1 hour. Yep, trade into a 1 hour. Pretty sure it's also a 4 hour gap as well that we've traded into right here. So we have efficient pricing inside of this, meaning there's really no other reason for the market to go beneath this low unless we are targeting liquidity. But at the moment, I think we want to reach this supply zone before we get to that. So with that being said, there's your point of interest here on your USD, this large area. All right. If you want to be a little bit more precise, we can draw the 50% of this area here, and you can look for a more precise entry here. But honestly, I would start looking for something as soon as we tap into here, because this is our propulsion area, meaning this is where that we have that large impulsive move. So the market could honestly tap right into the top of this zone and take off from that propulsion area right there, which is basically our sponsored area. But essentially, we're looking for the market to come in here, wait for the slowdown of sellers, let sellers slow down, start seeing that range, look for that accumulation, take us higher, target this point of interest. Okay. Pretty simple here on EU, looking at this area and those two areas as your main demand and supply points. I'm gonna put this different here. There we go. That looks a lot better. Okay. Here. So we didn't react off of here. Let's keep looking on GU. Came all the way down this low. Okay. So with GU, we have our time frame leg. We have our accumulation right here. And we have another drive. I know it's a lot of marks on here. Another drive towards the upside. Market comes lower, trades into that discounted pricing. And since then, we've been pushing higher. Now, remember I told you guys about when the market does something like this, right? Wherever we talked about this is not an accumulation. So what that means is this is not enough to sustain. This is not enough orders to sustain the market continuing higher like this. Okay. So with that being said, I do expect the market to kind of range here a little bit, as in the price action is not going to be 100% clean, since at the base, we don't have that accumulation supporting the overall buyers. All right. Doesn't mean that this market can't go higher, but the way it's going to go higher most likely is going to be different here. Because so far, you guys can already see that we were having a stem of reaccumulation. So accumulation here, reaccumulation there, and then we go higher. And essentially, we invalidate that right there. Okay? So with that being said, we invalidate that. But look at the market now again, right? We have what? That's not a distro. We have this as our distribution. See that little manipulation here. Market comes lower. We trade into it, we get a reaction, and we invalidate it. This is the type of price action that you can expect when we don't have that base underneath us. So it's going to be very important that you're just following the order flow cycles in this. So right now, honestly, I would stay with the same support of the market. I don't see the market didn't trade into that specific gap in here. Nowhere here. We still have that manipulation that we see on EU. It's just not as structured. But if we want to go into a specific area, I like this rejection here. I like this rejection here, trading into this gap. 30-minute right here. I want to see what the session itself looks like. So here we go. We have distribution here. Market trades into the distribution, plays off, redistribution, manipulates us toward the downside, and we have that impulse. So this whole area is our propulsion, meaning this is going to be a specific point of interest for you to look for lower time frame entries in on this market. Now, that specific area is going to be here. Remember, the market still has to open up. Okay, so have some wiggle room with these areas, because we could gap into this and the price action could become kind of ugly. But this is that specific area. Now, honestly, I think we could react from just this whole entire manipulation itself. But this is going to be that zone. All right. That's going to be that zone I want you guys to pay attention to right here. Look for the market to start accumulating and try to take those longs towards the upside. And also just understand, if the market dips underneath this zone, the market doesn't have to stay underneath this zone, but this is just that specific zone. So if the market dips underneath this zone, but we're still slowing down and we still see that accumulation, it is still right to take that. Okay. Just as long as we stay within this initial manipulation here, this is a reaccumulation. This is what actually gave us that impulsive move. So that is our last point of real buyers from this manipulation. But overall, this entire thing is a reaccumulation that we could respect as structure overall. Okay. Let's move on to GJ. Let's see what's going on here. Okay, nothing has really changed for me on GJ, honestly. Kind of don't like the price action a little bit. I think this is, did we talk about this area here? Well, if we did talk about this area, I'm not sure if we did or not, but if we did, I hope you guys were able to catch that move. This looks like a pretty easy trade here with the reaccumulation on top. Trying to see what the market is currently doing right now. It's a 15-minute. Did this make a new high? We invalidated. Okay. That looks like a, yep. Yeah, it's literally the same little area right here. This reaccumulation zone. This reaccumulation zone right here on GJ is going to be that focus point. Why? Because it invalidates this supply area right here. So where is it at? Boom, boom, boom. We invalidate this supply area and we close through it. Okay. And that is that propulsion that takes us to invalidate that area. So look for entries here. This is going to be your first point of entries. And then if you don't get that entry, look for the structure entry. The structural entry will be at the 50% of here. Okay. So this is the point of interest right here. And this represents the structure. Okay. Those are your two areas. Let's see. USD JPY. USD JPY. I think I'm gonna skip USD JPY today, guys. Gold. Trying to think about the last thing we talked about here on gold. Potential accumulation taking us higher. It didn't happen. See that this got extended to this low right here. Some things were moved around though. This high to this low. We're at the 50%. I still believe this is still that same zone up here that we'll trade into. Specifically right here on gold. But at the moment, I do think that we will manipulate these lows. I do think we will manipulate these lows. I think we will go lower, manipulate these lows, trade into this larger gap underneath us down here. I think there's might be like a 1 hour here that's fresh. Yep. Looks a lot better. Potentially we could trade into here before we get a move higher. This recovery from this whole swing low, look how we instantly recovered that as a V-shaped recovery. You guys can see that V-shaped recovery. So this is a large accumulation that is playing out. And honestly, this could potentially take out this distribution. It's just that the spring of this accumulation is just much more large and violent than the spring of that distribution, which means there's probably a lot more orders here. So I would definitely look to long into this supply zone, being that this supply zone can fail. Also, another reason why that is because we have a manipulation down here, right? We have this large manipulation. Well, not a manipulation, this mitigation over here that caused this movement. So this could be a very sensitive area for the market and for buyers in general. Okay, so that is the end of my market outlook. I hope you guys enjoyed this. Let me know if you guys have extra pairs that you want me to cover, anything specific, more of the majors, right? Just let me know down below. If you are inside the Discord, send me some comments there, and I will see you guys in the next one. Peace out.